Watch Budget 2018 with Bloomberg Quint.
Hello and welcome to this special edition of Ask BQ, where we answer all your budget-related queries. You can write to us on Twitter, Facebook, or just call us on 022-4540-4141, or you can mail us at askbq@bloombergquint.com with all your financial queries, and we'll try and address as many as possible on this show. Just remember to add AskBQ hashtag in case you are coming on Twitter.
All right, let's introduce our guest for the day. We'll be joined by Mayuresh Joshi of Angel Broking in a while, and also joining us on the show is Amit Jeswani of Stallion Asset Management. Hi Amit, good afternoon, and thanks a lot for joining us today on Bloomberg Quint. Before I go across to the queries which we've received from our viewers, I want to know what is there on your wish list from the Union Budget 2018. When I say wish list, it can be of any sector, any stock, whatever you want to mention.
The wish list is very large, Navneet, and the most important, see, there are going to be 3 R's which are important. This government has a way of, communicating things, 3 W's, 3 R's. So the 3 main important thing is roads, rural, and residents. So affordable housing is going to be a huge thrust of this government. The second would be roads. You've seen Minister Gadkari going and meeting, broadly doing 7 interviews in the last 1 week. I've not seen him so active on media in the last many months. So basically, he's going all out and saying that this is the kind of budgetary support roads needs. So road is one thing. Rural is very important. As you see, it's very political as well. So rural, road, and that's it. Rural, road, and residents. So basically affordable housing. So those are the 3 main things that we would be looking out for.
Okay, so these are some of the interesting themes that Amit is watching out for. Let's start with Q&A session. Akash Agarwal writes to us on Twitter. He wants to know if the whole reality sector, real estate sector, will actually benefit by the budget. What kind of provisions, Amit, would you foresee for this particular sector, and what should he really do ahead of budget with his real estate stocks?
We are extremely bullish on real estate, Pradeep. In fact, if you divide the real estate pack, you can divide it 70-80% of the real estate pack is the unorganized place, and 20% of the real estate pack is your organized large builders. Builders who focus on affordable housing, they have a 80D benefit where they just have to pay 17% tax and not 30% taxes, right? So builders who launched their project before March 2019 just have to pay MAT taxes, that is about 17%. So companies any company which is into affordable housing and launching projects, that should be the trend where people should be buying big. See, 70-80% of your sector who are there into real estate, I'm speaking about the unorganized guys, they are very troubled right now, and this is our style of investing. When 70-80% of the market is troubled, and the rest 20% keep on taking market share. So you'll have larger branded organized builders like Oberoi, Godrej, and these kind of larger players who will keep taking on market share from these guys. So those guys will grow at 30-40%, even though the whole market will grow at 7-8%, the larger builders will keep taking on market share from the unorganized guys. This is a super clear trend, and we've been buying real estate. So in this dip, we would be buying real estate very aggressively.
Amit, our viewer Akash also said that between Kolte Patil, Suntec Realty and Soba, which is a better bet for long term? And you're betting on affordable housing. Kolte and Suntec too announced their foray into affordable housing last year. I don't know how much of groundwork has started there, but which one would you pick among the 3?
See, I need a leader in a micro market. What are the prerequisites for me to buy a real estate company? That if you see globally, okay, and we went and saw what are the leaders of in real estate. So these guys have to be leaders in a micro market. Kolte Patil is a clear winner in the Pune market. But if you see, they have launched 7 redevelopment projects in Bombay. Let me tell you, all 7 projects are stuck because they're not getting permission. So Kotle Patil has that small risk. But you can look at other affordable housing builders as well. That's where big money can be made. But Kolte is also super good. But the new expansion is not in their core micro market. The new expansion is in Bombay, and no one knows Kolte in Bombay. They're just popular in Pune. So I would be very happy if Kolte would expand in Pune, but that's not the case here. But overall, the whole sector will do good. You need to choose your winners.
Okay, let's take another query then. Babani Shankar Baira writes to us on Facebook. He wants to know which sectors will be benefited the most after the budget and which are the stocks he should look out for with a one-year view with regard to his investment. Well, Babani, that's an open-ended question. I'll take it to Mayuresh. Mayuresh, Babani wants to know which are the sectors that will benefit post the budget. We have to wait for the budget for it, but tell us which are the themes or sectors that you're betting on that could probably get benefited post the budget.
So like Amit has 3 R's, I think our concept suggests 3 A's. So with that aspect, I think it's agriculture and rural, allocation towards infrastructure, and probably what happens on affordable housing. So I think a lot of impetus will be laid on all these 3 aspects because that is clearly the need of the hour that the government needs and intends to do. And again, it's going to be a vindication in terms of doubling of farm income by 2022. Again, affordable housing, I think it's not kicked off on a serious note, both in terms of implementation as well as construction of these properties over the past few years. And again, I think roads and infrastructure is something that the road minister is harping upon, and which has clearly been indicated by the Prime Minister itself, that greater allocation probably can come through in terms of a capital outlay. Having said that, my own sense is that within these 3 sectors itself, I think because the themes are so large, you're probably looking at certain players which are fertilizer companies which can do well because of any announcements that are expected out of DBT. You're probably looking at a few pump players because I think a whole host of announcements can actually happen across agriculture and allied sectors related to that. So pumps, specifically I think upgradation and improvement of irrigation facilities related to pumps is something that can also be a focal point within the budget itself. What probably happens in terms of affordable housing, as Amit was just mentioning, I think any leeway is happening in terms of both exemptions, probably in terms of the applicable limits, both on interest and principal is going to be keenly watched. What probably happens in terms of reduction of GST rates, a single window clearance in terms of getting your approvals through. I think all this is going to benefit affordable housing players selectively and affordable housing finance players selectively. Selectively, I think microfinance players, a few of the rural financing players can do exceptionally well with greater outlay happening and expected impetus probably relating to asset quality pressures going down, the credit growth improving, and with that credit cost coming down related to improvement in return ratios. FMCG staples selectively should do well as the distribution network improves, the disposable income specifically in semi-urban and rural areas go up, and as these factors probably aid the leverage and the expansion facilities in terms of their balance sheet dynamics, selectively I think rural focused FMCG and consumer staple plays should also be doing well.
Okay, so these are the key themes and some of the stocks. We'll also take the picks, favorite stocks that both of our experts are betting on ahead of budget. But before that, let's take the next query coming in from Aman Arora, who writes to us on Twitter. He says, as this budget is expected to focus on the rural economy, will we see an uptick in two-wheeler auto space, which are the auto stocks that should be looked for investments with a 5-year view? Amit, what would be your call? First of all, will the budget help two-wheelers? And so should that be the pocket that one should be looking at?
So first of all, auto ancillary is a complete no. So auto ancillary companies are trading at 30 times, right? Broadly, you pick up any auto ancillary stocks, these guys are trading at 30 times. These guys don't have a brand. The growth rate of auto ancillary cannot be higher than the growth rate of the underlying OEMs, right? So there is no reason why these auto ancillary companies can sustain this valuation. We are on the 9th year of the auto bull market. So the auto index bull market started in 2009, right? At 2,300, and we're broadly 10. The auto index has gone up 10x in the last 10 years. So broadly, it's a 26% compounder. So in the last wave of a bull market, auto ancillary, the lower quality stocks start outperforming the higher quality stocks. So that's the stage of auto index that we are in. In the two-wheeler space, there is nothing which is cheap that we like right now. Will it benefit? So basically, there are 10-15% growing kind of trades. You've got a new player which has come in the market. It was a three-player market with TBS, Hero Honda, and Bajaj. But now you've got a fourth player because Honda and Hero have separated. So the gains are not so easy. It's not easy to understand. TVS is coming with great launches on Apache. They have a BMW type, but this is just so expensive. TVS has an operating margin of 7%, and other players like Bajaj is at 18%, Hero is at 12-13%, but TVS gets a just unbelievable valuation. So that's the company we like, but at these valuations we don't like.
60 times historical, or maybe 40-45 times forward earnings. But Bajaj would be what, 2022? If you look at Hero, is again 20 times. It's still expensive.
So Bajaj is an export trade, and it's more on a trade on Africa and emerging markets rather than a trade of India. So they have chosen to go outside India and target higher margins of 17-18%. Hero is cheap, but then there is not so much growth there. So TVS is getting those high valuations because of the new launches, and that thing is missing on Hero. But overall the sector is good. So the sector is not bad. TVS, I don't understand the valuation, to be honest. The market's way too much excited about the new launches, and the rest look okay. Like Bajaj is not an Indian trade at all. So about only, I think, 40% is India and 60% is exports. Hero Honda is more of an Indian trade, you can say. That's the only one where you can look at.
Okay, that's the view in the auto space. In fact, Pradeep, the industry is also asking for some sort of relief when it comes to taxes for companies who are venturing into the EV space. So I think that will be the most watched out in the auto pack. But our next query comes from Ramya Jain, who's written to us on Facebook. She wants to know if the renewable energy space will be in focus for this budget, and she wants to know for which stocks to bet on with a short-term view. Mayuresh, I'll throw this question to you. From the renewable energy space, anything to watch out for? Any short-term? She's asking if there's any stock play there.
Again, largely, Navneet, for a renewable space, I think you probably need to give it more time because these projects are long gestation projects. So the kind of capital employed in these projects, the cash flows probably start coming through probably in an elongated fashion as the load factors and utilization levels across the chain starts moving in. So whether you're talking about hydel, you're talking about wind, you're talking about solar, the tariffs probably have come down far more drastically in all these three sources. Somewhere even on the hydel side, take for example NHPC, I think 50% of the work in progress is stuck up. And with that respect, again, I think the kind of expectations of revenue projections probably go in for a toss. So my own sense is that maybe there are better times ahead to probably looking at the renewable space as a whole. Again, I think the themes probably to look out, and infrastructure, anything to do with that, I think there's going to be added capital allocation that is expected to come through. So for renewable as a space, I think there will be better entry points going forward. So I think one should really move ahead in terms of how the economy is shaping at this point of time. Yes, there can be budgetary announcements around this space again, but to a large bit, again, I think with falling tariffs, with utilization levels remaining extremely low, generally across industries and across the spectrum of stocks across these industries itself, I think there are better sectors like infrastructure that one can probably look at.
And what would you pick up in infrastructure, Mayuresh?
So selectively, Pradeep, again, I think on the roadside, you're probably looking at players like a Sadbhav Engineering, a KNR Construction. The expected activity in terms of ordering, both from NHAI and Morth, is expected to be far more significant as a lot of managements have put in. An outside bet, which can be tossed in on declines, can also be something like a Dilip Buildcon. Again, adding and stretching onto the point in terms of infrastructure and carrying it forward to the power side of things, I think Power Mech looks very, very interesting. The stock has probably moved up. So again, one must look out for declines, but the kind of expectations that the street has probably in terms of more O&M contracts getting awarded. And as you were saying, I think even on the renewable side, I think a lot of the projects in terms of setting up hydel projects, servicing the existing power plants, or even the non-power business, which is again 1,600 odd crores out of its total order book. I think that looks very, very interesting. So I think a few players within this power infrastructure side, the road infrastructure side, EPC players probably look very, very interesting.
Okay, let's take some more queries that we are getting. Mayank Verma writes to us on Twitter. He asks if there will be a price increase for cigarettes in this budget. He's also said ITC has not taken a price increase close to the budget, so how will it impact the stock? Well, Mayank, let me tell you first, excise duty is done with when it comes to cigarettes, because now GST rate of 28% is applicable. And with regard to ITC not increasing prices before the budget, they've already increased after the GST rates were tinkered. Post that, in fact, for the last 2 quarters, ITC has been increasing prices. But let me take this question to Amit. Amit, what's the view on ITC? Because the valuations, majority of these analysts say it is trading at a cheap valuation, especially when you compare it to the biggie HUL. I know excise duty is done with, but I think it's the government cess now which is in focus when it comes to the cigarette business of ITC.
So if you see globally, cigarette is one of the best business model. If you see the last 50 years, we did an analysis on this. The best performing stock has been Philip Morrison, which is a cigarette company. The thing is that if you have a 10-20 year horizon, this company, the moat is pretty strong, and the company will be able to pass on the prices. But if you see the volume growth, that volume growth is not so strong because there's strong competition which is coming from illegit cigarettes. So it's not that people have stopped smoking, but the share of illegit. So as your taxes keep going higher, the share of illegit cigarettes, duty-free cigarettes increases. So that's been affecting volume a lot for ITC. But broadly, 5-10 year view, you will keep getting 10-12% kind of return. This is not a 25 CAGR story. They've been promising a lot on the FMCG side, but I think that's not an easy business.
Okay, so that's the call coming in on cigarette. Mihir Jeswani writes to us on Facebook. He wants to know if it is the right time to invest in Karnataka Bank with a 10-year view. Mayuresh, what's the call?
It's too long a view, Pradeep. So I think the investor should probably take it every couple of years, probably revise his portfolio. But within the banking sector itself, again, I think my focus goes probably on the large corporate-facing banks. So I think ICICI Bank is something that I probably still like at this point of time. Again, the results are there tomorrow. So what probably happens in terms of the drill down of the watch list, the elevated pressures that one seen on the corporate book, specifically in terms of reported GNPAs, elevated provisioning, which is probably taken a hit in terms of increased credit costs. I think that is probably in the price at this point of time. As these pressure points start ebbing off over the next few quarters and as credit growth starts picking up, which you've probably seen having significantly increased on the retail side, but selectively even on the MSME side and the SME side, as this growth starts picking up and the overall credit growth reaches double digits over the next few quarters, I think ICICI is in a big beneficiary state at this point of time. Again, valuations not too expensive, and there is every scope for increase of ROAs and ROEs. So put it straight and forward, I think over the next 2 to 3 years, I think I remain extremely bullish on ICICI Bank. I think go for the large cap names. I think the expectations of earnings recovery and stability in terms of reported numbers is far better there. And the worst is probably over in terms of the corporate book and the deterioration that we've seen there.
Briefly, Mayuresh, if you could tell us, do you think a higher fiscal deficit has been discounted by bond markets and also is priced in when we look at the current price of these major banks?
So to a certain bit, yes, I think, because if you see the moment that has probably happened in terms of the yields, a reflection in terms of what has been the jitteriness going around in the past few weeks, specifically when the government announced a few weeks back of 50,000 odd crores additional borrowing required, reverted back to 20 odd thousand. So again, I think a minor slippage is something that the street can live with, and that is probably getting reflected in the yields at this point of time. But the larger picture is, what does the exchequer do in the fiscal path when it declares the next year's projected numbers? So are you probably going to stick with the target or the roadmap that you probably devised, or is there going to be some amount of laxity happening on that front as well? So I think that is something that will come to know on the first, but at least the slippage marginally is probably to a large bit discounted by the bond yields. Whether the markets will accept that, I think a knee-jerk reaction can probably get seen in the market or witnessed by that, to say the least. But I think a few basis points miss, even if it happens, I think will get digested and gestated by the markets.
Okay, gentlemen, before we let you go, I'm just going to take one top pick from both of you. Amit, I know you've stated a lot of them and majority of them are from the affordable housing space, but give us your last one top pick for could be 2018 or could be a play on the union budget as well.
So my largest holding and Stallion Asset's second largest holding is Dilip Buildcon. That's one stock that we've been super bullish on. Now I'll just explain you a little about this thing as well. So if you see the balance sheet of 70-80% of road construction companies, the balance sheet is pretty damaged because of bots and all that. So this company is on the 20s. So here again the trade is simple. You've got a large sector tailwind. 20% players can bid for the next projects. The 80% just cannot do anything. So here again, Dilip Buildcon is the leader. It executes 95% of projects before time. And so as soon as it gets an order and order book for the next 2 months alone, there will be 75,000 crores of road orders which need to be tendered out. So the orders will be very strong for the next 2-3 months. So you'll get a first re-rating up. But this company, since it executes all its orders before time, markets will not say that every year you make 30%. Markets are a discounting machine. So as soon as it receives a big order, markets will discount future cash flows in day one itself. So Dilip Buildcon is our top. It's my largest allocation and my top pick for 2019 and 20.
Okay, well, thanks Amit and Mayuresh for taking time out and answering all these queries related to budget coming from our viewers today.
Well, that's it on this special edition of Ask BQ. Thanks very much for watching, but stay tuned to more news and updates on Bloomberg Quint Live.